Hi everyone, welcome back to my channel. My name is Phi and this is Money Phi'losophy. Thank you for coming back for another episode of Tesla Technical Analysis. Today we will go over Tesla, and if we have time at the end of the video, I will also add my analysis on Amazon and Shopify. But first, if you're new to my channel, please consider subscribing. I am a growth stock investor and a trader, and I'd love to share with you my investing and trading journeys. Without further ado, let's get right into technical analysis for Tesla for today, September 14th, 2021. Now, before we go into the daily chart for Tesla, it's important to note that this coming Friday, September 17, is quad witching day, which means that it is the day that all four types of contracts will come into expiration for the month. And that is market index futures, option futures, stock options, and stock futures. They're all going to expire on the same day. And there will be a lot of traders that would selling out of one set of contracts and buy a new set of contracts. That directly affect volume for Tesla among many other stocks, and so we do see a little bit of volatility this week. This Friday in particular, I think that it will be a good opportunity to look into a closing cross trade, which typically happens within the last 10 minutes of the Friday trading day. I will link a video down below by Rob Maurer. He went into detail about the mechanics of the closing cross trade on Friday leading into the day that Tesla was added into the S&P 500. Even though that event is no longer relevant, the concept of closing cross trades is still very relevant for all of us traders. So I highly encourage you to watch that video a few times to really understand the cross trade there. We certainly saw a lot of volatility the day that Tesla was added into the S&P 500, partially because of quad witching day at the time, but also because of the closing cross trade. So I think Tesla and Amazon, to a certain extent, would be prime candidate for this type of trade. We can unpack that going into Friday, but it's important to kind of note that in the back of our mind going into a chart analysis for today. So here's the daily chart for Tesla. The price action for today was definitely interesting. It did not go below the support of $735, which is important. So that means that for the time being, 735 serves as a very decent support on the daily and hourly here. Tesla spiked all the way up to about 7:55 in the morning, but as soon as it hit the pivot points, it retraced back. Let's take a look at the hourly chart here. So you can see that early in the morning, within the first half an hour, that complete the hourly candle here from 9:30 to 10. Tesla almost hit the pivot point up top here. On the second hour, immediately within the first few minutes of the second hour, Tesla hit the pivot point and then retraced back, and it has been moving back down since. It never hit the bottom pivot point at 732, but it kind of reached close to about 736 and start bouncing. To me, this is a consolidation candle, and together with the volume over 100% here, I think Tesla is still relatively bullish. As noted yesterday, Tesla made a complete U-turn, and the volume yesterday was 131%. Today was consolidation day, the volume at 100%. This tells me that there are still a lot of buyers in the market and the sellers have not come in. The trading range for tomorrow is not very volatile. Based on the pivot points here, it's 763 on the upper end, 745 at the middle pivot point, and 735 at the bottom pivot point, which happens to be my support line as well. However, if today is a true consolidation day and tomorrow is another day of spiking for Tesla, then I suspect that this pivot point won't be observed very well. And where Tesla spike above this top pivot line, it could get to 768 and then 793. So we'll have to see what the volume looks like within the first 20 minutes of the trading day tomorrow in order to anticipate whether or not Tesla can get through 763. So we can see that the last 2 days of this week, which were yesterday and today, we do see the major volatility in the stock, which means that the IV, The implied volatility of the option is also very high, which means that every move that Tesla make on either direction could affect option premium a great deal. Back to the daily chart here. This daily candle is definitely not bearish by any means. If anything, it is a good candle that holds the previous price action. And hopefully tomorrow it could make a little bit of progress toward the upside, although the long wick on either direction is to be expected. Taking a look at Amazon on the daily here, there are a lot of lines, so bear with me here. They are important lines for trading, so I wanted to leave them there, but I'll guide you guys through it. You can see that I drew a bull flag on my green lines here. This is the flag pole, and this is the body of the flag. So the lower end of the flag is 34.22. The upper end of the flag is 35.36. The first price target for this daily bull flag is 36.49, and the second price target is 37.53. And Amazon had an all-time high of 37.73. So you can see that if this daily bull flag were to materialize, Amazon could get all the way up to where it was before, which was almost all-time high. Today, the market internals, however, tells me that there are a lot of selling pressure. The volume is also below average, which is only at 68%. So I'm still a little hesitant entering a call option at this point. I'm really waiting for some sort of an oversold condition to jump in. And today, Amazon did move down a little bit, but the price action and the volume wasn't too much. So I still have not entered my call option. Given the chats around inflation, the chats around interest rate increase, and various market conditions of employment and whatnot, I'm a little bit afraid that if I were to enter a call, I would be caught in a major correction. So that's part of it that holds me back, because let's face it, we have been having a really good bull run. So a correction is also just a matter of time. So that's the macro environment that sort of hold me back. But if I take charts one day at a time, I do think that there's a decent opportunity coming up here. If Amazon moved down one more day tomorrow and get to anywhere around 34.30, I probably could take a call option, assuming that market internals are still pointing either neutral or to the upside. Right now, it is a little bit bearish, so we have to watch out. And when I say market internals, I'm referring to the various indicators that I have. It's the trend, the MACD. It's also the volume together with various mechanisms that I use, which I could share in a separate video. So let's take a look at Amazon hourly chart here. Amazon has been moving down very gradually over the last 4 days. It is hovering right around 50 days SMA, lost it a little bit today. Hopefully it will reclaim that tomorrow and start moving back down further. Now, if Amazon ended the day tomorrow in the 3400, which is the bottom pivot point here, I'd say it could be very bearish. So I'll have to gauge it very carefully before entering a call. For right now, the trading range for tomorrow is not too far off from today. The upper end is 34.78. The mid pivot point is 34.57 and the bottom pivot point is 34.08. So far, Amazon has been doing a lot of the dead cat bounce in the last few days. It would pop and then start moving downhill, and popped in the morning and start moving downhill, and same thing with today. So be careful with trading Amazon there. We'll have to wait for an opportunity where Amazon is oversold. Severely oversold to jump in, because Amazon premium is pretty high, and if the stock doesn't move in your direction for a few days, it could eat up the premium. Right now, I think that the RSI is not completely oversold yet. I'd like to see Amazon hit 34.22 and then revisit RSI before deciding to take a trade. Here's the chart for Shopify. Last week, we talked about how Shopify was forming a head and shoulder. And so that pattern is even more pronounced this week. And Shopify has been moving down since the last time we talked. It was around 1,500 at the beginning of the week, give or take, and it start moving down another $50 since. I do think that based on this head and shoulder pattern, Shopify could get to 1362, which is I do think that with this head and shoulder pattern, the next price target for Shopify would be 1413, which is another $40 from now, and then probably 1362, and then we'll see if it finds a good support and bounce, or if it would fall down further. Right now, 200 days SMA is around 1286, which is quite a little bit to go from here. But note that Shopify already lost 50 days SMA, so now the difference is, so now the space between 50 days SMA and 200 days SMA is usually fair game for a stock when it wants to do a correction. So that could be the case. However, Shopify is not one that will always adhere to pattern. Even though it's on a downtrend, it could gap up in the morning and eat up your premium. So with Shopify, unless I'm absolutely sure, I usually don't swing it. Over the long period of time, I usually just trade Shopify within the day. So if Shopify does gap up in the morning by $10 at least, that could be an opportunity to trade a gap. The trading range tomorrow for Shopify is on the upper end, 1480, which is about $30 from here. 1461 middle pivot point and 1413 at the bottom pivot points. I think that if Shopify gaps up in the morning and somehow gets to close to about 1470 or 1480 around this top pivot line here, I think there's a good opportunity to take a put option for the price target of either 1460 or 1450 and effectively close the gap. Then if we're lucky, it could get all the way to 1413, but Shopify reversed really fast, just like Tesla. So if it does gap up, creating a decent profit, I will not wait all the way down until 1413 here. Conversely, if Shopify gaps down to about, let's say 1440 or below, I could take a call option for it to hit 1450, which would close the gap down. So that's how I look at Shopify. The gap trade in Shopify is a very good trade, but it requires experience in execution. So I would highly encourage you guys to trade on demand over the weekend and pick a random date to trade Shopify and really appreciate the volatility of when the market opens for Shopify. If you could do that and be successful consistently, then you could transfer that experience on on-demand trading into actual reality trading, and I think you would be very successful. I myself did on-demand trading for a long time with Shopify to practice the ability to execute before I jump in. So while the gap trade is a very interesting trade, it happens really fast and it needs a little bit of practice before you can master it. That is it for this video. Hopefully you find the information helpful, and until the next video, bye.